So just dropped the little one off at the childminders, and now I'm off to see a lovely lady called Joanne Bell, who runs Bell's Accountancy, and she also has recently bought a company called Pomfrey Accounts in Bexley. So I'm going to see her in Bexley, and we're going to be talking about my 3 big pet hates for business owners. They're things that I come across all the time when it comes to their spending and their wealth creation, and how their attitude towards their business is killing their financial future. So listen up to our 3 top areas. Hello and welcome. I'm Rebecca Robertson, the Director of Evolution Financial Planning, and today I'm here with the lovely Jo. Isn't she lovely? And we're matching today. We haven't planned that whatsoever.
We definitely didn't.
We didn't speak this morning. So I'm here today to speak to Jo. I've got some couple of questions for her. But my first, to sort of get us going, is to talk about a subject that is very, very close to my own heart as a business owner myself. And that is running your accounts or running your business, and how your psychology of running your business is affecting not only you but your personal legacy. Let me explain what I mean. There's a couple of things that I see all the time happening with business owners, and you're going to recognise this. So the first thing is spending in your business. The second thing is creating assets in your business or lack of them. And the third thing is selling your business in the future for your pension. There's a couple of 3 points that I'm going to talk to Jo about today, so I hope you'll enjoy. But before I get started, Jo, if you were a packet of crisps, what type of packet would you be?
I reckon I'll be pickled onion. I'm pretty
Pickled
strong.
onion? Is there pickled onion crisps? You have to write to Walkers to see if you can get some crisps made.
Yeah.
Jo crisp, pickled onion. I'd be a frazzle, because I love the bacon, even though I'm vegetarian. That's the only way I can get a bit of bacon flavour, because you can't beat that smell and that flavour of a bit of bacon, even though I am vegetarian and strongly against it.
Nice substitute there.
Yeah, and I could talk about substitute. The only thing I like is corn chicken nuggets. You can't beat them. They are really good. They actually do taste like proper chicken nuggets. Anyway, we digress. So Jo, we had a little chat a minute ago about spending in business, and something I see as a financial advisor with clients who are the personal spending is that we are a spending culture, and I see that happening within businesses as well. And you're an accountant. You run how many accountancy firms now?
3.
I mean, this lady's amazing, right? And it's her birthday on Monday, and she's 21. No, she's not. But she's certainly doing so well for herself, and I'm just looking awe of you. It's amazing. So you see this with your accountancy business, where accountants' philosophy, and it's then seeped into the client's way of running their business, is you get to an end of a year, and it's almost like, okay, I've got my expenses, I've got my income, I've got some left over. Okay, what else can I run through my business to make it more tax efficient so I pay less tax, and then increasing basically their outgoings as an effect? Do you see that quite a lot with clients?
Absolutely. So my mission at Bell's really is to change the way people think about accountants and look to us as more business advisors than just people who are looking to save you tax. Obviously, the ideal balance is to do both, but the sorts of conversations we have, for example, is a client will call us up inquiring what their corporation tax is likely to be at the end of the year. And they'll say, oh, well, if it's that amount, should I go out and buy a new van or buy some different asset for the business? And I'll say to them, well, do you need a new van? Because if the answer's no, then what you don't want to do is spend the money just for the purposes of saving a tiny percentage of that money in tax, because then you've lost the rest of the money that you've spent on the van unnecessarily. So if you need that for your business, then of course there's a good time to buy it in terms of tax efficiency, and there's a good way to buy it, which is where our advice comes in. But the saying I use is don't let the tax tail wag the business dog. You've still got to make good commercial business decisions.
Say that again.
Don't let the tax tail wag the business dog.
I love that. And I would argue that a van, especially if it's not being used, is not an asset. And I talk about cars quite a lot. People like the idea of driving a nice car, whether it's a Merc or an Audi. But you mentioned previously like leasing would be a better idea, certainly for business owners, because they are a depreciating asset. And there's even talk that clean carbon and becoming more carbon neutral is becoming an environmental issue quite soon. So that asset is going to depreciate even more. If it's not even be allowed to use, then tax will increase on getting that car on the road. So having, spending 20 grand on a van, is that the right thing? And is that the best way to invest in your business? So would you say that then, for me, for example, when it comes to spending, what that does is that it creates a culture of spending. It's almost like you're given, I've got this money in the bank, so I should write a cheque and go and pay for this course, or go and pay for a new website, or go and pay for a new banner or leaflets that just, a lot of money gets wasted. Do you think that people sort of psychologically do that intentionally to not pay tax?
Sometimes, yeah, absolutely. Yeah, they think that because they can run it through the business, because it is deductible, then that kind of justifies the spend. But the problem is you don't get 100% back of that spend. You only get the percentage of tax that you pay. So if you're a 20% taxpayer, you get 20% back. If you're 40%, you get 40%. The other 80 to 60% is just unnecessary spend. So you've still got to think about it and budget and think, does it serve the business? Does it generate more income? And do we need it in order to deliver the services we deliver? Not just spend it for the purposes of reducing a tax bill.
Brilliant, and I love that. And there's a real change of decision making, which I think we need to be conscious of more than anything else. So what that then creates is a lack of income. So what happens is that, okay, well, they're trying to reduce tax, not pay tax, and therefore maybe not pay themselves more income, because the more income they're earning, more tax they're going to pay. So any thoughts on that at all?
Absolutely. So I always think, to some extent, it's a definite benefit if you've got quite a large tax bill, because that means your business has made a great profit. So you're better off. And we touched on it with the asset conversation. So things like investing in a van or whatever unnecessarily, there's no benefit to holding that asset. Whereas if you use that 20 or 30,000 to put into another product like a pension or a buy-to-let flat or something that's increasing in value, the money that you earn from that can be used to pay any additional taxes that you've got to pay. So yeah, it's about creating wealth rather than trying to get rid of it.
Yeah, exactly. And from my perspective, and from my perspective, somebody that does investments like pensions, I see all too many people coming to me saying, I think I'm meant to do my pension, and they haven't been told by their accountant, they've been told by a friend or a family. Do you think it's a sort of an accountant's job these days to be informing clients ways to actually create these assets and create the wealth by a pension that something is tax deductible and it is for their future?
Absolutely. I think accountants have a unique perspective on a company and a person's business and their income and expenditure, because we file the compliance reports that are needed at HMRC and Companies House. People know to come and find us, but they don't necessarily know of the other opportunities that are out there to build assets and invest money and look after their wealth as well. Looking at estate planning and things like that. So we as an accountants have a duty to advise clients of that. Not obviously do the work, 'cause that's not our expertise, but to pass it out to someone who does know.
Sure, exactly. And I've got to be honest, I don't really find accountants that great at doing it. But I personally feel they've got a bit of a duty of care. I would, if I was speaking to a client and I saw that there was something with their business, I'd say, go back to your accountant, and ask them this, or speak to your solicitor about this. Because we've got a real duty of care, I feel, that to share our knowledge rather than just restricting it to what we're supposed to be doing for that client at that time and going above and beyond.
Absolutely. I think accountants are notoriously historically quite lazy, and that's just it's just been because we're paid to do a job in terms of filing accounts with HMRC and Companies House, and you kind of think, well, there's no need for us to do anything extra there
over and above.
But actually, that unique position that we are in means we should have those conversations with clients, and sometimes it's just about educating staff. I mean, I'm a business person myself, so I'm involved in property. I have my own pensions, my own investments. It's not always on the mind of employees, for example. It's just that they've not come across it before. Maybe, you know, they're not aware that these opportunities are out there. So it's just for the business owners to educate their colleagues about the conversations that they should be having with clients, and that it's not just about how to save them tax.
So really then what we're saying is that people need to go back to their accountant and ask them a couple of key questions. So how can I be paying myself more? What assets can I be creating effectively for my business? And my last point is about selling their business. So speaking to a business coach or accountant around your long-term future, because what I see all too often is that people don't do a pension or any sort of long-term investments because their business is their pension and they will sell. You heard a really interesting statistic about this.
I did. So I went to a Selling Your Business Expo not too long ago, and they stated that 85% of businesses that are put up for sale don't ever actually sell. And there are a variety of reasons for that. And that's the first one being that the business can be entirely dependent on the owner. Therefore, once they
often it is, you're the one that started the business, you've built the business, you've put your heart and soul into the business. It's hard to remove yourself, even if you can or if you want to.
That's right. And on obviously the business side of things, if you haven't built something that can go on without you, then once that business owner steps away, there's nothing there for someone to buy. So that's the first problem. And then the second problem is actually finding a buyer, someone who wants to buy a business rather than just going out there and starting their own.
Yeah, and if it's not an asset that's worth them buying in the first place, or they could do it themselves, then what is the point? And that is one of my sort of I don't want to go on a rant, but it's one of my pet peeves. People don't start; they sort of put all their eggs in this one basket, so they don't do anything else. Whereas what I find for the most successful financial astute clients and their financial success in general is having a real basket of different opportunities with property, with ISAs, with different types of investments, and also their business. So they're not just reliant. We was talking earlier on about you having, with one of your accountancy firms, having a high amount of one type of client from one company. I think by having businesses that are diverse in your client portfolios and the products that you offer, as well as possibly having more than one form of income yourself personally, is a healthy way to grow if you want to be an entrepreneur in business.
Absolutely. I mean, the wealthiest people in the world, you know, the likes of Warren Buffett, they would all advocate having multiple sources of income, not just one. And that's within your business as well as outside of your business in your personal wealth, because that's true security then. You know, the way technology and the way industry changes, businesses can disappear overnight, you know, Video Killed the Radio Star and all of that sort of thing, and Uber and challenging black taxi drivers, all those sorts of things. Even in professional services, you know, we think that we will be around and be needed forever, but actually with the onset of artificial intelligence and things like that, all businesses are a threat one way or the other. It's just about making sure you stay ahead of the curve and diversifying as much as possible.
Definitely. We've all seen the change in the high street with Amazon and etc. Businesses could be out of business in 20 years' time when they plan to retire, or even 5 years' time when they plan to retire. So if you're planning on your legacy or your pension, your future income when you're reducing your amount of work that you want to put in, because let's face it, at 70 you're not going to be wanting to run around the way you are now, then I'd strongly suggest that you look at maybe getting a business coach to adjust your business model to ensure that it's providing more of a passive income, and also ways that you could remove yourself from it and potentially creating an asset that is sellable. But at the same time, do look at what your future retirement income is from existing pensions that you already have in place, or possibly starting a new one and adding to it, which is tax efficient, right, Jo?
Absolutely.
Perfect. Well, I hope you enjoyed today. So our top tips would be: go and speak to your accountant, go and get some advice around what you currently have in place, and find out if you can start to create a more diverse income for your business. Thanks for coming along today, Jo.
Thanks for having me, Rebecca. Appreciate it.
So what was it? What packet of crisps was it again?
Pickled onion, because I'm strong and really rare.
Well, I do love pickle. More of a chutney girl, maybe, though.